My next guest joins us from Boston University. Laurence Kotlikoff is an economics professor at BU, and he's written the most recent book, Jimmy Stewart is Dead, a reference to the George Bailey character in the movie It's a Wonderful Life. Larry Kotlikoff, today the Federal Reserve officials announcing that they would keep the benchmark interest rate at record lows for an extended period of time. Is this a nod to the idea that maybe our economy faces substantial challenges in the future? Larry?
Yeah, absolutely. It's indicative of the fact that the economy is in some ways stalling and we could have another recession. It's very reminiscent of what happened in the 30s. The economy fell and then it went up and then it fell even further. And same thing could happen in the stock market. It could crash dramatically. That's what happened in the 30s. Came down, went up, and then it really sank. So it was worth 14% of what it was worth in 33 of what it was worth in 29.
So, Larry, what needs to be done in order to forestall such a dire prediction?
Well, I think we have at the root of this problem is a lack of trust and confidence in the government and in the financial system. I think Main Street can operate fine with a healthy Wall Street, but not with a sick Wall Street. And rather than really fundamentally fix the system in a way that everybody understands is a real fix, the government has been trying to prop up the old system and restore it with introducing lots of bureaucracy to make the whole thing sclerotic. There's going to have to be a federal regulator babysitting every single banker in the country seems to be their scenario. They've also thrown huge amounts of money at this problem and run us up a huge debt and printed huge amounts of dollars. So we have the risk of inflation. We have the risk of I think the U.S. government, the federal government is actually in worse fiscal shape than the Greek government, if you look at the long-term picture.
Larry Kotlikoff, what do you suggest, though? I mean, you're talking about the financial regulatory reform bill that is before the Senate and the House that they're trying to reconcile. What would you recommend?
So my book, Jimmy Stewart is Dead, is about, in part, an economist's view of what happened, but also about introducing something called limited purpose banking, which is transforming the financial system into the mutual fund system. The mutual fund system has not collapsed in this crisis, and what the idea is that any financial institution, whether it calls itself a bank or an investment bank or a hedge fund or an insurance company, they all would have to operate as mutual funds. Mutual funds are companies that market mutual funds, which are themselves little banks which have 100% equity investment. So they can never fail. They're not borrowing money. They're just taking money from the public and invested in things that we can understand that they're buying. That they're transparent. They've got third-party custody. We'd have a federal regulator who would make it clear on the web exactly what these securities are. It would oversee the rating and appraisal of these securities. And you have a very efficient, simple solution, and we can have credit running through the mutual funds. We already have 8,000 mutual funds. About a third of the financial system is already mutual fund. And I don't work for any mutual fund, just to make it clear. But a third of the financial assets are held by mutual funds. We're running credit through that system. We're having people buy equity through that system. And we can use that system because it's set up safely. The rest of the financial system basically has collapsed. The Obama administration and the prior administration, the Bush administration, were trying to rebuild the part that collapsed in exactly pretty much the same way as it was. I think we should not rebuild in straw. I think we should rebuild in brick.
Are you suggesting something that's similar to, let's say, federal credit unions? Would that be a model?
Well, it's very simple. You just say to a Citigroup, look, your investment banking, that has to be a consulting business. You cannot operate it with any leverage, any risk. All you can really do is run mutual funds, issue mutual funds. So some of the mutual funds you're going to be issuing will take in money on an equity basis. People get back shares, and that money will be invested in mortgages. Some will be invested in junk bonds. Some will be invested in treasury bills. Again, we have 8,000 mutual funds already in the marketplace. They are providing credit to small businesses, large businesses, households, because they're buying up mortgages, they're buying up junk bonds, they're buying up corporate debt. This thing is already working. All we have to see is what's worked.
But why would that forestall a future financial debacle? I mean, if you're talking about leverage, aren't those issues that are already being debated between the House and the Senate bill that would limit leverage from some of these large banks?
No, because each mutual fund takes on no debt. A mutual fund, by definition, is 100% equity financed. They're not borrowing any money and promising it to pay it back, and then they can't do it, and then they turn to the government to bail them out. That doesn't happen with mutual funds, with the one exception being the money market mutual funds, which under what I'm proposing would have to be mark to market and would not be guaranteeing not to break the buck. They would break the buck if they had to. So what you have to do is set up a system that basically doesn't involve the financial intermediaries gambling with the taxpayers' dollars. We don't need them to do that. All we need them to do is safely connect lenders to borrowers and savers to investors, just to do their job, which is financial intermediation. It's not taking the U.S. taxpayer to the casino. That's what they've been doing. That's what we're restoring. That's not working. The public doesn't trust it, and that's why nobody believes in the future of this economy.
So would it be a system that really just is mutually owned? In other words, like a savings and loan company that Jimmy Stewart used to run in It's a Wonderful Life?
Well, you wouldn't actually have to trust Jimmy Stewart, to be honest, because the guy's running if you're investing, for example, in a Fidelity investment mutual fund, if you're buying a stock mutual fund, you've bought the stock. You can check on the web what exactly it is that mutual fund's holding. That's the kind of disclosure that I would require.
All right, we're going to have to leave it there, but I want to thank you very much, Laurence Kotlikoff, coming to us from Boston University.